Hey, thanks very much. We're going to get to Chuck in just a moment. He is here. He is ready to go. But I also want to share with you at the beginning of this hour, and then I'm going to share it right after Chuck's program ends, that we need 150 baseball hats or visors. Whatever you have. The first organization, could be a company, organization, whoever gets to me first, you'll be our official hat sponsor. It can be 150 baseball hats with your company information on it, your logo, specific to your business, and they will go in our golfer welcome bags because what we have done in the past several years, we have almost gotten to the point where we can't get to zero, but we are so close to having no expenses. Obviously, no one ever gets paid or anything like that, but by having a baseball hat or visor, whatever you have, either would be fine. I'd like visor maybe because what we've done in the 9 years, we've had hats for most, visors maybe once or twice, but 150 baseball hats would be fine. 150 visors with your company logo would be fine. And the first company that contacts me, you can call me here. You can leave a message with Susie at the main office, which is 609-645-9797. You can email me, harryhurley@aol.com. If you forget my email address, which is really simple, it's my name, and you just have to remember AMO and AOL, but harryhurley@aol.com. If you go to my website, harryhurley.com, click on my picture, a mail screen will pop up there as well. But the first company that steps up, and we would need them in my hands by June 15th. Sooner would even be better, but June 15th would be fine. 150 hats, and you would be a big, big part and be our hat sponsor and as part of the gift welcome bag that each of our golfers receives each year of our charity. All right, now we'll get to Chuck. Chuck Malamut, he's in his 26th year here with us on the Hurley in the Morning program, our official financial advisor. Chuck leads his group as managing director of the Malamut Group at Morgan Stanley's Northfield office. You can reach Chuck and his team for all of your financial planning needs at 609-383-2010. If you heard me mention Chuck during the week or during Chuck's program, mention that to Chuck. If you heard him during his program here on air, mention that. And the following program that we begin right now is presented by Chuck from Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Without further ado, morning, Chuck.
Good morning, Harry. Good holiday.
Good. I did some community service. You want the volume down a little bit better
go.
now?
Thank you.
We spent a good part of yesterday with some really great folks in Hamilton Township at the Memorial Day program, and also as master of ceremonies for the dedication of the Joe Nichols Wall of Fame in Hamilton Township. It was beautiful. Hundreds of people came out in the rain to Town Hall. It worked out great that all the events took place indoors because everybody wound up being together instead of spread out at different events. And it was a good weekend, Chuck. And yesterday was particularly special.
Yeah, Harry, I'm imagining the shore traffic that I saw. All the resorts had to have a fabulous weekend. I'm not so sure about yesterday because obviously it's sort of a getaway day. I think a lot of
which
people
with a lot of rain,
early.
maybe the getaway day happened the day before even.
Yeah, we were traveling back Saturday night and saw a lot of traffic getting on to the expressway around Egg Harbor City, heading into Philadelphia. So, but all in all, I mean, the holidays now, it seems as if everybody leaves Thursday. It takes off Friday, so they try to obviously extend the weekend. But I'm guessing that all the reports that we get back should show some pretty healthy resulty.
Hopefully, Friday was like a Saturday, and Saturday was like a super Saturday, and Sunday was like a Saturday. Hopefully,
yeah. Obviously, it'd be good for Atlantic City if everything went well over the weekend.
So, what's the market update, Chuck?
Well, Harry. Last week the market posted another gain. It was very, very quiet. as we got into the Memorial Day weekend. Below average trading volume, but the reduced activity did not hold the market back. It was actually the second consecutive weekly advance, and it looks like, unless for the month of May, we're up about 1.6% the last time I looked in the S&P. So it looks like we're going to put in probably the fourth consecutive month of gains here within the market. So as we closed on Friday, the S&P was actually at the year's high, as the benchmark was up about 2.3% for the week. And the NASDAQ, which had been under a fair amount of pressure, was actually up 3.4%. So that market outperformed the S&P due to two sectors, biotechnology and technology, which had been beaten down, fairly significantly. So if you take a look, there wasn't a lot of economic activity, but there were a handful of reports that pointed to a potential rebound from the weakness that we saw at the end of the first quarter. We'll get into GDP here in a little bit, but April home sales, April pending home sales, April durable goods, they all beat expectations for the quarter. And so did the estimate for first quarter GDP. So that kind of set the market on a positive tone. But, as we got to the end of the week, the Fed, the Fed has done everything in their power to broadcast as to what's going to be happening. So, Janet Yellen and all the other Fed governors, were out there as of late on Friday, reminding investors that, the FOMC is ready to raise rates if the economic data does not take a turn for the worse. So we're going to see a lot of reports this week. And, the bets are 30-40% they go in June. If not, they go in July for sure. When we had started, Harry, I'm going to say about 6 weeks ago, we were the thought process that there was going to be no rate increase, maybe one towards the end of the year, but it looks as if the Fed is broadcasting this is going to be done relatively sooner than later.
So with the Fed chair being hawkish, that means that Treasuries, the 10-year futures, fall because of that.
Yeah, the rates. Yeah, prices drop and rates rise for sure.
Here's some numbers that I saw. This is called the odds of a rate increase in June, which is implied by federal funds futures. It climbed to 34% from 30% that it will happen by June that you talked about. I think May 27th to be exact. They rise to 80% that there will be a rate increase by the end of the year. That's up from 74% just 3 days ago. So when she talks like that, you can see where this is headed.
Yeah, for sure, Harry. If it doesn't happen in June, it will happen in July.
Or by the end of the year.
Yeah, I mean, if they go now, which they probably will, either this meeting or the next meeting, then don't. And if the data continues to trend positively, then there'll be another one that'll come. But the question is, does it come in December? Does it come prior to the first week?
Well,
first Tuesday in November?
December would be very apolitical because the election would be over by then.
That's correct.
If they do it prior to November 8th, then I think that one particular side of the political equation gets hit hard with that.
Yeah, Harry, my guess, unless the train comes off the tracks, that you're going to, based on the data that's coming here domestically, you're going to see something in the next 60 days, and you're going to see it again in December as well. So probably 2 hikes for 50 basis points before we get to the end of the year here.
Are people committing to 10 years based on the return right now, or is that a very unattractive instrument at the moment? Well,
Harry, actually what is happening, the yield curve for the past 6 months or so is continuing to flatten out, where your short rates are in line with your longer-term rates, and they haven't. That's
my point. So why would you lock up for 10 years?
Well, in all likelihood, what we want to try to avoid, traditionally you have a sloped yield curve, where your longer rates are higher than your shorter rates. You don't want certainly the yield curve to be inverted, because what the yield curve indicates is whether or not we're going to have a recession, or economic times will continue to prevail. A flattened yield curve is not necessarily bad for investors, because if you increase rates on the short side, you don't know are they going to stay and for what magnitude. Think about if you had if you shortened the out on the yield curve several years ago because you were waiting for rates to go higher. Well, actually, that didn't happen, and the time value of money you lost as a result of having your money sitting in an instrument that was either having no yield or negative yield, as what you have here internationally. So, we've been buying, Harry, intermediate term. A lot of investment grade corporates. We seem to think that it makes sense, and the yield component is there at this point in time.
Chuck, what's the latest in terms of precious metals, gold in particular?
Well, Harry, for the longest time, gold virtually got no attention. It was, initially, if you go back to the time that we started, working together, gold was always viewed as what? As a hedge commodity, as a hedge, as a non-correlated asset.
But even in the early days, you always recommended some participation, right?
But very, very
but small.
Yeah, very, very small. Yeah. And you've had these periods of time where gold takes off sort of like as a rocket ship, and then in a relatively short period of time, begins to trend back lower. So we've had obviously a lot of volatility in the equity markets of late, up until say the month, we'll call it mid-April, and then the volatility seems to have subsided somewhat. Gold's, as a result, has become somewhat of a more acquired asset by investors. They were looking for that hedge, so to speak. So if you go back and look at the first quarter, gold had its best return in decades. It was up 16% as interest rates across the world fell. Central banks expanded their use of unconventional monetary policy. And you think about that, the negative interest rates that we have overseas that we kind of just chatted about. So that performance carried on into the second quarter. On May the 2nd, Harry, to be exact, gold was up more than 21% for the year. And a lot of that was sort of unrecognized, but has since fallen by about 5%.
Did that go up a lot because of the start of this year?
Yes, it did, Harry. And what this reminds us about gold, it's not a substitute for traditional portfolio anchors such as cash, which doesn't lose in money in nominal terms per se. But I guess the question that your listeners will be asking, so where do we go from here? What's the outlook for gold? You have the extraordinary central bank action that we're seeing is far from over. We're thinking that's going to continue. And the related concerns with respect to that is going to continue to bring buyers back into that particular asset.
By the way, how's it extraordinary when there's been 1/2%?
No, not
quarter
just,
of a point in 10 years.
Not just here.
Okay. I got
not
you.
just here
okay.
domestically, but
All
I'm
right.
talking more internationally.
Okay. All right, I'm glad I asked.
But however, if growth, in the U.S. proves resilient, and that's the question: are we growing into what magnitude here in the U.S.? And interest rates rise, which everyone is predicting, it looks as if gold might lose some of its luster, so to speak. So you might, if you bought it as a hedge,
I believe that.
You might want to, take a serious look at what you have and maybe lock down some gains and, and move into some other particular assets.
Chuck, we're going to get our first break in. When we come back, we're going to talk about Atlantic City municipal bonds. We're also going to get into the United States GDP, because since Chuck and I were last together, GDP has been revised again for the first quarter and has been revised upward, still fractional, but revised upward to 0.8 of 1%. So still not even at 1%, but fractionally higher than the last time we spoke about it. This portion of Early in the Morning brought to us by the exclusive golf club, to the Hurley in the Morning program and also to the 9th Annual Hurley in the Morning Golf Open Charity Open Harbor Pines Golf Club in Egg Harbor Township at 500 St. Andrews Drive. To phone the team if you want to schedule a tee time or you want to speak to Deb Stevenson about an outing or a special event for a wedding, banquet, any type of activity that the Harbor Pines Golf Club can be of service to you, you can reach them at 609-927-0006. For golf outings, Deb Stevenson is the only certified golf planner in southern New Jersey. She does a great job, and she really will work very hard to make your event a success. Events are always having trouble gaining enough golfers and, a lot of the things that you need help with, and they're really good at different skills games and really making your outing classy and as productive and profitable for your cause as is possible. For memberships, they have the practice facility, the golf academy. They have the wonderful grill room. You're going to love it there. Book a tee time either at the website, harborpines.com, or by dialing 609-927-0006. For the 9th Annual Hurley in the Morning Golf Charity event, I plug all these other events that are happening at Harbor Pines and here, there, and everywhere. We're going to be helping a group tomorrow on the program, actually, that's having a charity golf tournament, the Sons of St. Patrick's. The Hurley in the Morning Golf Open charity event is Friday, June 17th. And if you either can sponsor a hole, it's $250. You'll have a hole sign out there with your name on it, your organization's name, phone number, whatever you want on the sign. If you have an item that you can submit for our silent auction, we would appreciate that. And you can reach me here at the radio station, or certainly you can email me at harryhurley@aol.com. 21 minutes past the hour, more with Chuck Malamut, the official financial advisor to the Hurley in the Morning program. Reach Chuck and his team at 609-383-2010 for all of your financial planning needs. Back with Chuck Malamut in 30 seconds. Hey, thanks, great one. We're back 22 minutes past the hour with Chuck Malamut. I am Hurley in the Morning, and a reminder, the Malamut Group standing by to help you with all of your financial planning needs at their Morgan Stanley Northfield office, 609-383-2010 to reach Chuck and his team. The Malamut Group, 609-383-2010. That's 609-383-2010. A question, Chuck, from a great guest listener named Mike, who wrote it into the program. If the dollar value is down, does that typically mean that gold goes up?
Harry, it should. But, you never want to rely on history because I think there's a lot more that gold trades on now, and a lot of it is, I think, going back to what the central banks are doing, not so much here in the U.S., but more overseas.
Good. All right, Atlantic City municipal bonds.
Well, Harry, I mean, you covered the story probably better than anyone in the local media. We did have the honor and pleasure of speaking with a group of really astute people last week and brought them up to speed. The history of Atlantic City and where we thought Atlantic City was going. And I think it was probably on the eve of the signing.
That's correct.
Of the bill. We
knew the legislation, the next day, the legislation would be voted on, and it was passed. And I said to you and I said to our esteemed company that the governor would sign it, and in fact, he signed it the same day. That doesn't often happen in government. So they all knew the sense of urgency to get this thing going. And then we talked about the fact of the 150 days or the 5 months rather, basically 150 days, 5 months, and what that means in terms of can Atlantic City actually achieve it. Chuck, by the way, I mentioned this only one other time, and of course without mentioning any specifics, but that was a pleasure to team sort of prepare and to do that presentation that I thought went extraordinarily well, Chuck.
Yeah, Harry, I was happy to have you. I think we delivered a solid message. I mean, there was some really great follow-up. And
it's already panning out as we talked about.
Yes.
Before it even happened.
It's amazing. See, the great Kreskin is here.
The amazing Kreskin making predictions that come true. So Atlantic City municipal bonds. I keep thinking that if this is truly a workout and if there's no intention at all of, filing anything that would do less than pay everything that everyone is owed, won't this ultimately bode well?
Well, Harry, I think if you take a look at the municipal bond market, which is rather opaque and not as transparent as we would like it to be, much like the equity markets are, I decided the best thing to do is to take one particular issue, because there's a lot of different issues with respect to any municipality, different interest rates, different maturity dates, general obligation, a revenue bond. So
this is going to be good for me to hear live with all of our listeners, because my predisposed bias from the beginning is that when the legislature and the governor all got on the same page and they passed meaningful financial rescue reform for Atlantic City, that markets would interpret it as a positive event. Let's see if there, even anecdotally, if there's anything to that point.
If Atlantic City went to the market via the state, now for additional capital, I mean, they're being funded from the state, so they're not going out to the marketplace per se. You would think that the cost of borrowing funds would be less expensive. Let's focus, Harry, on a issue that was out several years ago. We've talked about this before, an Atlantic City, New Jersey general obligation bond, which is, GOs have a higher probability of success of investors being paid than a revenue bond because of the way they're backed. When we looked at this particular bond, this was a 5% coupon, December 2027 maturity. And we watched the bond, trend lower over the last several months. And I think, Harry, the best thing to do is if we looked at this bond, say, every week to see if the trading is improving, I think that's going to be a good indication of what the municipal market thinks about Atlantic City. So I looked at the bond right after our show last week, and then looked at it again on Friday morning to be exact, because by then all the news was out, correct?
Yes.
And this particular issue is now trading at anywhere between 65 and 65.5 cents on the dollar. So if the bond made it to the end date where the investor was receiving their interest every 6 months, and then the 66.5, we'll call it, turns out to be $1, the yield to maturity on this particular bond is in excess of 10%.
That's why they buy them.
Actually, well,
plus they think they're going to get paid.
No, hold on. Right. So let's move this a little bit further. So if you put out your capital, put up 65 cents on the dollar, ended up with a 5% interest rate on the face value, so your cash flow is significantly higher as well. But when you trade municipals and you buy municipals and you sell municipals and corporates, you're looking more, Harry, to trade at the yield to maturity or yield to worse if a bond were to be called as referred to. So interestingly enough, I looked at a couple other issues at basically in the same year maturities in the state of New Jersey. West Deptford Township, New Jersey general obligation, 3% coupon, current price at 102, with a November 2000. With a September 2020 maturity. So 3 months before the AC bond. Yield to maturity 2.78%. That bond is a AA all by itself. It's quote, it's not insured.
But it was looked upon as almost no risk, though.
Yeah. Now remember, we talked about a couple of weeks ago about New Jersey Transportation Trust Fund.
Yeah.
And the fact that they receive appropriations from the state, and it's not a true revenue source. Same year as far as maturity. In this case, June of 2027. And this entity, believe me, I'm not particularly in favor of the New Jersey State Trust Fund at this point in time, because of what's happening with the state of New Jersey. A 4% coupon and a price of 101.6, so that takes your yield to a 3.70.
All right, Chuck, but a sidebar unrelated to these specific examples are very illustrative and they're very informative, Chuck. But let me ask you this. 40 years of the casino era. Has anyone ever not been paid?
No, they've all been, well, hold on.
Okay,
let's rephrase that, because
I know what you're going to – I'm going to stop myself because I know there are times where bondholders have made concessions and deals.
No, are we talking municipal debt or are we talking corporate debt?
I'm going to let you answer that.
All right, if you're talking municipal debt, they've been paid.
Yes.
If you're talking corporate debt, they haven't been paid.
That's true.
In the fact that, Trump filed 4 times.
I agree. I was
during
taking
his
it back,
tenure in Atlantic City.
my clumsy verbiage as soon as I said it. However, on the municipal side, these yields are higher because there is perceived risk, unknown risk. But in the last 40 years, has there really been any?
Well, there hasn't, Harry. But, I mean, and looking back, historically speaking, we talked about when we were with that esteemed group last week about the trials and tribulations of Atlantic City. And bondholders were paid.
Yeah.
Every time. The question is, you think about it.
And even on the other side, on the corporate side, even when sometimes bondholders they've made deals where they took more stock. Sometimes they've made deals to not get paid where they took more equity. I know what you're saying about, 4 times this happened and that happened. But what I always thought was amazing on the municipal obligation side, there were these higher yields because of some perceived risk, which I never saw as being there because they were basically I'm saying this as a layperson. This is not literally true, but they were basically guaranteed.
Well, Harry, if you go back and look years ago, there was a lot of turmoil in California. Remember the conversations, the state was going to fall off the map into the Pacific Ocean. Well, for the most part, that has worked out. I think that because of what has been created here, and I'm not saying anything that's not been said before, I'm not quite certain what's going to get accomplished in 150 days. And at the end,
I don't think they can accomplish all of it. So I think this is just a delay of 5 months of a state takeover of Atlantic City. I think they're going to try really hard. I think Mayor Guardian, City Council, and everybody involved, the collective bargaining units have been just unbelievable in stepping up and giving back and making concessions in other ways. But I don't see them being able – because after all, the decider is someone who wants to take it over. So they can just say, hey, good start, but you didn't get there, and here comes the takeover. I think it's going to happen. We're coming back in just a couple of minutes. It's at 34 minutes past the hour right now. When we come back, if Chuck has more to share on Atlantic City Munis, he will do so. We will then shift gears soon to the U.S. GDP that I did comment on the upward revision, still fractional, but the upward revision. We'll get Chuck's take as we continue every Tuesday morning in the 8 o'clock hour with our official financial advisor to the Hurley in the Morning program, Chuck Malamut, the managing director of his team, the Malamut Group at Morgan Stanley's Northfield office. For all of your financial planning needs, turn to Chuck, 609-383-2010, 609-383-2010. Hey, thanks very much. Welcome back. 35 minutes past the hour. Chuck Malamut is here for all of your financial matters. Again, to reach Chuck and his team, 609-383-2010, 609-383-2010, and they can introduce their concept that they have perfected over the course of many decades of asset allocation, coupled with the all-important, it's important, what you do and also the distribution of it, and Chuck and his team have a great system. Chuck, anything further on Atlantic City Municipals, or we'll shift to the next topic?
Well, Harry, I think the only thing I'd like to do is just sort of keep this on the radar. It's certainly easy enough to track, and maybe every couple weeks we can chat about it again, see if the price
in a short sentence,
the price has improved or it's going the wrong way.
In a short sentence, is there any evidence that markets are either favorably or unfavorably receiving the news of this Atlantic City Financial Rescue Plan?
I think what happened this week, Harry, was it was anticipated as to what the results were going to be.
So had it not happened, it would have got whacked again.
Yeah, and the bonds have, in particular, have traded down for some time. So
How
it doesn't
quickly-
come as any surprise.
How quickly would these rating agencies be that have continued to lower the Atlantic City, landscape to say, well, now the state has passed legislation, Atlantic City will be financially rescued because either the city is going to achieve a 5-year plan themselves, which in order to continue self-governance would have to be ratified by the state, or if they don't, the state is going to take the city over. I would think at some point, wouldn't the same rating agencies that downgraded Atlantic City raise them again?
There's upgrades. Yeah, Harry, and it's a matter of, upgrades happen, downgrades happen based on the financial stability of an organization.
Because someone would have to admit, an objective finder of this kind of thing would have to say that circumstances have changed. This is not where it was a week or two ago.
Well, Harry, I don't think that Moody's and S&P and all the other agencies that are looking at Atlantic City, are looking at the town on a day-to-day basis. I mean, they're looking, on an as-needed basis. Now,
but if Atlantic City was going to default on something and miss a bond payment, they're looking at it on a daily basis.
But I'm saying that's with respect to a downgrade. Upgrades do not typically happen as quickly.
There you go.
Quickly as downgrades.
Yeah, as usual.
But I think that as we look at how this one particular issue trades, I think it'll be a very, very good indication of what the municipal market is thinking about the potential survival of our beloved town. So hopefully when I come back to you in 2 weeks, the bond will be trading higher, which indicates that the market feels better about the likelihood of success.
How do you think things would – I'm going to put out a hypothetical, then we'll shift to GDP. If the state takes over in 5 months and they start to try to work things out, do you think some workouts would happen where, say, a Borgata would be offered not every dollar for dollar but offered less than full? Do you think – that could be part of how things could work out, or the state would take over and pay everyone everything that they're owed?
Harry, I think everything is on the table. Borgata, everyone else that's, Borgata in particular that's now is writing down every time they get their tax bill, they just take it off the top and say, okay.
Governor Christie calls it Borgata's self-help plan, which I love. I think it's a fantastic description of it.
But
hey, that's $7.2 million every month that they know they don't have to pay because they're owed so much. Here's why I bring that up. An individual, and I know that it doesn't work always as it does for the individual, but if you're an individual and you decide to pay a credit card company that says, hey, you owe us $10,000, but if you pay us by this date or work out payment arrangements by it's paid in this amount of time, we'll settle for $3,000 or $4,000. That affects you because you have settled for less.
It does, and it obviously affects your credit. So let's think about this. The outstanding indebtedness on the backs of the taxpayers of the city of Atlantic City, part of that debt is the bond that we just chatted about.
Right.
So the municipal market is saying that, okay, Atlantic City is obligated to pay, on this particular bond, a 5% coupon. So your effective current yield, you think about it, is significantly higher than the 5, because what happens is, you're putting up 65 cents on the dollar. So the current yield on that bond is about a 7.7 tax-free. So the question is, are you going to receive it? And if you're going to receive it, how long are you going to receive it for? And then on the back end or somewhere in between, is this bond, the bondholder is going to be taken, so to speak, out to the woodshed and not get their full principal. So, I mean, there's a lot of moving parts here, Harry, that you and I certainly don't have the answers. But obviously the future of our town is very, very dependent on this getting worked out.
Great analysis, Chuck. You're listening to Chuck Malamut, our official financial advisor to the Hurley in the Morning program. To reach Chuck and his team, the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010 is their direct line, 609-383-2010. We have 3 other issues that we're going to cover in the next 5 minutes, and if Chuck needs an extra minute or two, we always try to build in a little bit if Chuck isn't finished. But this U.S. GDP sort of tickles me because it's been all over the place, but it's like almost embarrassing. It's like, oh, it's not a penny, it's a half a penny. No, it's 0.3 of a penny. It's kind of embarrassing. So this is at least, I think, the third revision of first quarter 2016 GDP.
It is, Harry. And every time I see the revision, I do chuckle, and I say, I wonder what my good friend Harry is,
He's thinking
is
0.8.
thinking about. So if you look back, the economy, the U.S. economy did, in fact, it grew slightly faster in the first quarter. The data points that we saw as late as on Friday, whereas now we've moved to a 0.8 annual rate, and I guess
is that up from a 0.3?
I think 0.5. I think it was originally 3, then 5, and now 8.
Well, it's going great.
So you got to put the word.
In 20 years, we're going to be at 0.9. This is fantastic.
But Harry, the indications are that the growth in the second quarter looks to be a slightly more robust, and the estimates that we're seeing are running around 2.5%.
Oh, wow!
So if we're able to get to that number, then and a lot of this, think about it, we always talked about the first quarter and the trough of earnings and how poor earnings were on a relative basis. So maybe the analysts were correct here this time, Harry, with respect to where we are going in the economy.
I'll never forget 1992. We were a baby broadcaster, and we were growing at 4.6% GDP. And the New York Times, the gray old lady, and all the other media darlings and experts all said it was the worst economy in 50 years. 50 years. What would we say today? Wouldn't the truth be 4.6%? They would be talking about robust, healthy. It would be incredible. It's my how times have changed.
I think you need to put the word super in front of robust.
It would be. It would be called just incredible. It would be called superhuman. But, of course, it was horrible when they wanted it to be horrible. All right, so that's enough on the GDP, which I think everybody will admit is terrible, and it doesn't look like maybe there's still a few quarters left, but this may be the first president to ever not preside over even a single quarter with 3% GDP. Even during the Great Depression, Chuck Malamut, we had multiple quarters during the Great Depression where we grew by more than 3%. This would be the first time in American history, 240-plus years. What's up with the Greek debt deal?
Harry, when was the last time you heard anything about Greece?
Quite a while. From you, and it was quite a while.
It seems like they something that was very, very...
it was going to rock world markets, and then all of a sudden, you don't hear anything.
Here's a small country that was going to impact the world, particularly the Eurozone, and anyway, kind of fell off the face of the map. But if you take a look, again, that can gets kicked down the road. They're going to avoid another debt crisis. About $10 billion in aid came from the Eurozone most recently. It's going to be dispersed in time for Greece to make its next round of debt payments,
because Chuck, they all decided it was better to pay that than to deal with the downturn.
Yeah, so the deal, Harry, was reached between the Eurozone finance ministers and the IMF. It includes limited debt relief for Greece, but not until 2018, after elections in some of the Eurozone's largest member states.
Wow, that's sweet. That's a great update. What about the United Kingdom and this vote to leave the EU?
The Brexit?
Because that was big.
It was very, very big, and it seemed it had a lot of headwinds, and now it looks as if, the last time I looked, about a 60 to 65% chance of it not happening.
Right.
So that is actually, I believe, June the 23rd. And there was a lot of risk in the currency markets.
That's the day Ed Hurst goes into the New Jersey Hall of Fame.
So it's a big day.
Big day.
For sure.
Big day. I think it's going to go down, but you never know. If momentum
go down,
I think it goes down to defeat. They get out. They're out.
Hold on. You think they exit?
I think they exit.
So you are going to go against the consensus right now?
Yeah, because there's been a lot more, I think, consensus that they're not in favor of staying in the European Union, and that I think they're going to vote to get out.
Okay, well then I'll be then.
I'm the contrarian, is what I'm saying.
Yeah, because everything that we're seeing is the opposite is developing where
it was the way I was saying, and that was in large agreement.
Right.
Now it has shifted to what you said, but I'm still saying it's going to go down.
I'm going to point counterpoint. I'm saying they stay. You say they leave.
That is correct.
Okay, good.
Yep.
All right, that's what makes
makes it interesting.
Chocolate and vanilla.
Mergers and acquisitions.
Harry, it got very quiet for the longest time. It seems there were not a lot of IPOs coming to the market,
and you know why.
And now they're coming back. So think about last week. There was a big deal out there where Monsanto, rejected a bid, a $62 billion takeover bid from Germany's Bayer. They said it just wasn't adequate, but they kept the door open, for a bid that could be in fact sweetened. So that's saying that there's obviously, there's cash out there. There was a deal that was announced this morning. It was I think Kansas City Power and Light. I think if I heard it correctly, they were taking over another energy company. But
here's another factor, Chuck. See if you're a buyer or if you don't buy into this. I think there are potential mergers, and people spend a lot of money to do these, and they realize that they could get knocked down for no good reason. And I think a lot of people are waiting this administration out. And that I think if we make change, and this again is not political on the Malamut Show, but if we make electoral political change, you might see a whole lot of mergers that could start to take place in a different environment.
I will agree with you on that one. There's a lot of cash sitting around waiting
and people want to do
home.
Things, but they just don't trust the current environment.
Yeah, and HP was in the news too. They spun off, not too long ago into two separate companies, and now they're in a deal with Computer Sciences. So I guess what I'm trying to say, Harry, is that there is activity, and that's obviously good for the market. We're getting obviously into June. The market traditionally slows down in the summer. I'm very curious, as we ramp up to that first Tuesday in November, if everyone's going to take the summer off or we're going to really be busy. Hard to tell.
Great visit, Chuck. We thank you, and until next time.
Harry, thanks for having me. See you next week.
Look forward to it. You've been listening to Chuck Malamut, the following program presented by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. We'll be back in just a couple of minutes. Stay with us.